This is the Friday, October 14th, 2016 version of the Market Plus segment. Joining me now is Walt Hackney and Elaine Kub. Guys, welcome back.
Thank you. Thank you, Mike.
Now, Walt, our first question goes to you, and it is an issue that I'm sure you are very familiar with. This is from Lee Reichmuth in Nebraska from Twitter. Lee wants to know, what does the cattle industry need to do at this point, because anyone unhedged for the last 2 years is close to bankruptcy? What should producers be doing from today going forward to stave off bankruptcy for these independent producers?
Many of them cannot. And bankruptcy is going to be a way of life as we approach the deep fall of this year. There's a syndrome out there right now among cattle feeders that the feeder cattle, if you will, are unhedgeable. There's nothing they can do. They're paralyzed, and they are victim of the marketing process that's going to take them into bankruptcy. And I know how that sounds, but it is a basic fact that too often these producers have an opportunity to get away from that attitude, but they've got to go now, finally, to a professional trader that can give them the proper techniques to get their hedging program done. I've got a customer in Saginaw, Texas, and he's a huge operator. He's so big that you would think that he cannot, his exposure has got to be phenomenal in regard to his cash flow needs and his risk protection. He called me last night and we had a long visit. Every hoof of cattle he buys, which is annually about 35, maybe 40,000 head of cattle a year, every hoof of cattle he buys, he hedges and is easily done, and he hooks a $60 a head tag to their tail and quits. He doesn't go for the big money. He's not going for the gold ring off the carousel. He's going for $60 a head, and that's all he wants to make on them. He made it when the other cattle feeders were losing 400. He made it last year when they were losing 400 to 500. This year they're losing from anywhere from not quite break even to a couple $100 a head. Yeah. He's made money all the way through this. And there is a hedgeability of these feeder cattle if they'll take advantage of a professional marketer in the commodity end of it.
Yeah, Elaine?
I'll weigh in on this because there may be some scenarios where the size of the contract, it might be easier to do it if you're at a large scale in some cases than it is at a small scale. But in that case, I would suggest that people go talk to their crop insurance agent about the livestock risk, the LRP. There's livestock crop insurance. It's not really crop insurance, but it is a risk protection. It's effectively a put of any size. And the details of it, you should speak to your agent, but I just wanted to point that out, that it can be done at any size.
It is out there at any size operation, and it's effectively a subsidized put.
Yep.
I mean, that's what it is.
Yep.
Well, Elaine, since this is part of your business, do you understand, which I do not, but do you understand what Pete Bond was telling me in regard to his techniques of putting he's got a daughter your age, and she does 100% of that by herself in his business. And
sounds like you guys need to get a new analyst on here.
She's designed a hedge program that's phenomenal, and that's what they use. And it's unlike, and he'll explain it to me every time I talk to him. And when we get done, I couldn't repeat him.
Well.
And do you see the potential of a hedge in cattle through the techniques you're aware of?
Sure. I mean, you would lock in on your selling price through a put or a short futures. That can be done. And in the cattle industry, and I don't know exactly what your friend is doing in Texas, but if he's feeding, in that instance, he's also got to lock in his input costs, which is primarily feed. That's the easy part, right? Especially now when corn is $3. This is a no-brainer.
How far ahead are you locking in feed costs here at $3 cash corn?
12 months or more. I mean, you look to December 2017, those futures are $3.90. So that's an opportunity for everybody to look at this and say, if I'm going to be producing corn in 2017 at $3.90, that doesn't sound so bad. And if I need to be feeding cattle for the next year and I can buy it now for $3, that sounds pretty darn good. So there's opportunities here.
Okay, I didn't mean to interrupt.
No, that's all I have to say.
He's
yeah.
locking in inputs, locking in his selling price, but there have been times over this past year with the incredible volatility where there is no place you can hedge and find a $60 profit, but there are other options you could use.
Well, and what I'm suspecting he's doing, or his daughter is doing, is that you're right, not every day you can go to the market and find your $60, but the days that you can find it, he's not getting greedy and waiting for $75.
No.
He's locking it in.
He catalogs an inventory of cattle, as you suggest, cannot be worked into that program. And as that market moves, he takes portions or all of those catalog inventory and he puts them into that $60 a head program.
Yep.
There you go. All right.
That's what he does.
That'd be a minimum size.
It'd be interesting, possibly. I'm sorry I brought that into your program here, Mike.
That's helpful news.
Well, I get an incessant parade of cattle feeders calling me, asking me how they can, if there is a hedge potential. I'm not smart enough in the marketing in regard to commodity to be able to give them any advice.
Well, like you say, Mike, not every day. Some days there's not. You wouldn't make money.
Right.
Yeah.
Well, now, Elaine, next question to you. And this one you kind of talked about on the show. This is from Ben on Twitter in Jessup, Iowa, Ben Renchi. He wants to know, where do you see the low in these markets?
Well, you know, I'm on Twitter, so I saw Ben's question in advance, and I knew I was kind of spoiling it in the show. And to be honest, the numbers that are the dates that I said in the show are just me looking at a chart. I haven't done, what he's referring to is, you know, earlier in the summer, I did this statistical analysis of what date of the year would you be most likely to see a corn market high? And it was June 18th, and that worked out great this year, which was fantastically lucky, and I feel fantastic. Yes. And I haven't done the full statistics about what date of the year would you be most likely to see a low. But in these normally abundant years, it looks like there have been some lows in very late August, and then, you know, the crop size gets trimmed, and then that was the low, which that may very well be what happened this year. And some years there's kind of a low in November if perhaps the crop gets bigger and bigger through harvest, which is not the case this year.
Right, but we're seeing a divergence where corn, that August low, we hit that 318 or 317 and change, and the crop gets smaller. Beans, we did hit a low, kind of a low in August. Now the crop has grown, so do you expect that November low, or are we going to grow this bean crop all the way through January?
I think beans are going to continue to have some good news with continued buying. There's going to be commercial business actually going in there and buying those beans on the futures as hedge, you know. Anyway, so I'm not too worried about beans. Frankly.
Okay.
Yeah.
All right.
I'm
But you're not yet re-owning.
Oh, no, I'm not.
If I'm selling cash off the combine, I just let those sales go.
Yeah. Well, I haven't followed my own advice in that matter, but I'm just saying I'm not real optimistic. But I'm not real pessimistic. I'm neutral.
You're neutral.
960
beans.
is, I think, maybe the best we can expect.
So you're
But I haven't sold my beans.
Okay. All right. So here we go. Put our money where our mouth
Mike,
is.
I can't help but sit here and think, if I'm a producer and one of the fans of Iowa Public TV and Market to Market, how valuable this conversation is to me.
Being sarcastic.
I'm learning more sitting here than I came to the party with.
Oh, well, that's not true.
I think Walt is being sarcastic. I just said, I don't know, sell your beans? Maybe not. I don't know.
You haven't, though.
I have not.
So Elaine is holding her beans. That's her market advice for everybody.
But I'm not holding them for very long. I've paid 5 cents for this month of storage, but I'm not doing that for very long.
So harvest is done in your part of the world.
In my acres, it is.
On the beans.
On the beans.
Yeah.
Corn in progress?
Corn, nationwide, we are going to hit the halfway mark right about now.
Okay.
But I mean, more or less, we're a halfway mark for.
Okay.
Yeah.
The corn harvest. Final question, and this is a big one. We're delving into all sorts of issues with this question. Was emailed to us. We invite you to email us questions too. markettomarket@iptv.org, I think is our email. This one's from Brian. He wants to know, what do we have to do to make the consumer, our legislative bodies, and the feds understand the dire circumstances our independent beef producers are in? What, if anything, do we have to do? Do we need to make the consumer or the feds understand the potential road to bankruptcy for a lot of cattle feeders in particular?
Very briefly, in my case, I don't think that it's necessary to have a formal effort to educate the consumer in regard to using the agricultural products. They've got to eat, and they've got to be able to pay the price. If you're going to the dance, you pay for the fiddler, and that's what they've got to do. What I'm trying to say is, we have every kind of an educational process in effect as we speak that will cause your friend there on the email to do what he wants someone to spoon feed him. That's not out there. You've got to get busy with the evidence that's available and take advantage of the programs that are already out there.
Right.
Now, that's
utilize the Farm Bill, utilize the livestock risk marketing program.
Which is still kind of a raw deal compared to crop insurance. I mean, there's no death loss coverage. There's no, I mean, it's not the same.
Is there opportunity in the policy realm here? We're in an election year, Elaine. Let's
I do have
get
a couple
political.
of thoughts. I do have a couple of thoughts. Not really political, but it just in terms of policy realm for the livestock sector, beef is better off than sheep right now. Think of the poor sheep. They're not even going to be able to use their over-the-counter medicated feeds when the new year starts. Beef at least has some crazy over-regulated system to get their antibiotics, but at least they have a system.
Sheep,
and last
they don't
I heard,
fit into the VFD
last
at all?
I heard, you can't even get you cannot get a feed directive for
And
any
you
of those.
have no subsidy for
And you
the
have
wool.
nothing. Yeah.
Right.
The government has quit that.
And you're stuck working with sheep. Just kidding. Bless you, sheep producers.
Yeah,
I do
right? That's hard
respect
work.
them.
Okay, but
Yeah.
one more thing about the consumer education. I think you're right that people should just be smart, but I will point out that there is a story that we should be telling, or at least a myth that we should be somehow busting, because I was just listening to some podcast about global warming. The best way that an individual person can fight global warming is by changing what you eat and eating less meat. And specifically, if you're going to eat meat, eat chicken or something. Don't eat beef because it's bad for global warming. Well, I think that consumers apparently don't realize how much conservation of American grassland depends on the beef industry. Chicken industry, not to pick on, I mean, I like the chicken industry too. They buy corn and soybean meal, but there's a conservation story about the beef industry that consumers are apparently
You
not
don't
aware
have
of.
chicken on open range in Idaho.
No, that's not. Yeah, it's not. So there is a nice, environmentally friendly, feel-good story about beef that people apparently don't know, and they're more worried about methane farts, which is silly.
Which, did California ever do
don't
anything with their methane regulation? They were going to tamp down on cow farts, but I haven't followed up on it. So
Jack Harris has made a glorified effort in his nutritional input to the cattle to lessen the amount of methane. But there's no visible potential in it.
Okay.
I mean, he's able to lose a lot
Who
of
would
money.
pay
if
for
he
that?
wants
Yeah,
to.
like I wouldn't pay for that.
Are you going to go in and buy global warming friendly beef specifically labeled at the store?
You go to Jelson's in LA, and that's a higher level than Whole Foods and all of those outfits. And you can sit there, like I was stupid enough to do here 2 weeks ago, and my son-in-law is a tree hugger, and so's my daughter. And I said, I'll buy the beef for this party we're going to have in their home. My son-in-law went down there, and I didn't go with him. And he came home, and he had a rib, about a 16-pound standing rib roast.
Okay.
And so I said, okay, Larry, how much do I owe you here? I'm buying. And it was $285.
Wow.
Now, how many people are going to do that? If I'd have gone, I wouldn't have done it.
No.
I'd have went over here to Vaughn's,
Yeah.
and I'd just sit down with Vaughn's and bought the same damn thing for $100.
Right. And
Maybe it was fed with flax.
maybe flax-fed beef.
I don't know what it
That's a
was
potential
fed.
market. But ladies and gentlemen, Walt and Elaine, we're going to let you go. We're going to let our audience go. But I want to thank you both so much for taking the time to share your wisdom.
It's been a pleasure.
I'm not sure how much wisdom, but
Right.
We learned a lot. And thanks to all of you for sending in questions via Twitter and Facebook. Please continue to do so, and we will get profound answers for you every week. Thanks for watching, and have a great one.